Hi everyone. Today let's talk about Eli Lilly earnings, as well as the credit card balance for the entire United States hitting above $1 trillion for the first time ever. Then we'll take a look at the economic factors and the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Eli Lilly raised their full year guidance by quite a lot, and their profits went up 85%. They reported $8.3 billion, up 28% from the same period a year ago. You can see that here, beating on earnings by 13 cents. Revenue beating by nearly $1 billion, and on such a low number here, that is a massive beat. And like I said, they raised their full year guidance by quite a lot, and the stock is rallying aggressively. Moving over to credit card balances, we are above $1 trillion for the first time ever. This is over a 30-day period, rising 7.2%. This was a rise of $45 billion from April through June, totaling $1.03 trillion, or the highest gross value going back to 2003. Total household debt also rose to $17.03 trillion, going up by $16 billion, another fresh record here. So we have the entire economy going higher, at least to some degree, on this increase in debt. Moving over to the economic calendar, you can see the 3-year note actually came in lower than the previous read, which is interesting. Looking at tomorrow, we have crude oil inventories at 10:30 and the 10-year note at 1300. Moving over to the earnings calendar, Eli Lilly beating massively, UPS beating on earnings, missing on revenue, SoftBank, big negative numbers, that almost looks like a typo, I wonder what's going on with that. Duke Energy missing on earnings, overall not terrible, big beat on Eli Lilly. Looking at tomorrow, you have Disney after hours tomorrow, Honda Motors, Trade Desk after hours, fairly interesting. And in the morning here, you have Roblox, that's always fun to watch. Moving over to Max Payne, very little change from yesterday. 447 still acting like a bottom. We pushed through that level and then rallied into the end of the session. Max Payne still sitting at 450. You can almost see a little bit of a rally, a close somewhere between 451 and 454. That would be interesting. Put call ratio went up a little bit. Options up around 1.1 million. Still looking at a very similar picture to yesterday. Moving over to the charts, starting with the S&Ps here on the hour and the 4-hour, you can see we've kind of generated a little bit of a structure starting to trend downwards. We're hitting the upper level of that trend now. Very similar to what we did yesterday. We ended up falling quite a lot in the pre-market, which was a little bit jarring, to be honest. But then we hit that level and then rallied throughout the session, almost engulfing the entire day's losses, which was interesting. But now we're at trend resistance, and if this starts to break down from this level, you could see a push all the way down to 443, or major trend support down around 442.90. That would be interesting. If this breaks out here, we might see a push up to around 452 or 453. That would be interesting as well. Clearly at a level that is important going into Wednesday. Moving over to the Qs, you can see a similar structure, but not quite as clean. You can see this low here from Friday was a little bit higher off of that trend. Similarly here on the low from today, stopped right here at a level I was watching, 369, held that level and then rallied throughout the day. Again, very close to trend resistance, close to that 55 EMA here on the 30-minute chart. If we jump that up to the 1 hour, you can see it a little bit more clearly. You have the 21 EMA sitting up there, and I would expect some resistance to appear at 373. You can see what that looks like on the 4-hour chart as well. Clearly an area where you could find some resistance, but you do have that 200 SMA here on the 4-hour chart sitting at 367.85, and that is worth watching going into tomorrow's session. Could absolutely pull back, test that level, and then get a little bit of a change of trend from there. You can see I have a level here at 367.63 as well. Moving over to the Russell, fell super aggressively today. Definitely wasn't stronger than the others. Hit that major trend support, very close to the 144 EMA, rallied right back up to the 9. Clear area of resistance on the 4-hour chart. This really needs to pull back, set up a higher low, and give you a potential to jump into a rally. Right now, this still looks like a downtrend with a big wick, and I would expect another follow through off of that trend line going into tomorrow's session. Dow continuing to chop within this zone. You can see we had the big bearish move like everything else, but it still held 350.92, then rallied back into the middle of that zone. Looks more like a consolidation. still the strongest of the group. Moving over to copper versus gold and the equal weighted S&Ps, you can see copper versus gold breaking down. Did hold this level at 1927. We've been watching that level for a while, but it did break the 55-day moving average, bearish momentum, indicating some weakness across markets. Equal weighted S&Ps throwing a wick just like everything else. Did not hit my 149.82 level, so we're still in this zone, and I would expect a little bit more bearishness tomorrow. You can see bearish momentum. RSI holding on that 50 line, slightly higher than this previous read on Friday. If this holds the 50 line, you could maybe argue for a pullback up to 153.19, but of course everything is still in a downtrend. 9 and 21 EMAs here on the daily chart crossing, and we're down about 0.5% on the day. Moving over to Apple and Tesla. Apple, we said this was an area where it could find some support. It did break down a little bit back to these previous lows and then rally throughout the day. Ended up making a slightly higher low from this midpoint. Still at the 9 EMA and still very much a downtrend, but you have to respect it. Momentum moving a little bit more towards bullish. RSI super oversold, but still trending a little bit towards bullish. I would still be careful here. This is obviously still a big down move, but it is showing a little bit of consolidation right at that 178.58 level. Looking at Tesla, similarly, we are consolidating right here. I don't have a level, and I might add one here around 245. I think that's an interesting level to watch. Yeah, makes sense right at these lows here from June of 23 as well as 15 June. So interesting level, but still very much a downtrend. Moving over to staples and discretionary. Staples holding this previous low as well as the 144 EMA. Still bearish momentum, but pretty good bullish volume on that second candle for the day. You can see how big that volume is. Fairly interesting. If we see a little bit of a rally tomorrow, that could signal some follow through off of that volume as well as that longer term EMA. Discretionary, big gap down, tested those trend lines, rallied back into the middle of this range. You can see we've been in this range for a while here, testing that lower bound. Maybe you could look for a trade back up to the upper bound. Right now, we're still moving sideways in that range. Moving over to sectors, we have healthcare as one of the top performers, probably off of that Eli Lilly earnings, rallying nicely back into this previous consolidation from the end of July after coming down and testing that 144 EMA. And then you have oil and gas continuing to march upward. You had a little bit of volatility between this range here. You can see we got below it, rallied back to the top, threw a big wick to the lows again today, then rallied back above that level. 145.92, interesting. You could trade off of that level, look for a nice rally. If you zoom out here, you can see when we were above it, going back to August of 22, as well as this big peak that we had here in November of 22. This tops out up around 161. I don't know necessarily that we're going to go that high, but you could definitely look for a push up to that 150 area. Does seem possible. Moving over to breadth here on the 50 and the 200, you can see that big red candle that we got, as you would expect on the down move. You'll notice that RSI is a little bit higher here on the 50-day average, even with a lower number. So we have divergence here, which is interesting. Hit that 200. Like I said yesterday, if we came into this zone, I thought we would find some support, which we did into the end of the day. So we could see a little bit of follow through off of this big down move that we had. Still a breakdown from this rising wedge, so you have to respect that. But I could absolutely see a move off of this level, set up a lower high or even a double top, and then we get a continuation lower. That would be interesting. Similarly here on the 200-day average, you can see that rising wedge hitting that 55 EMA, bounced from that level, basically holding in the zone. Very, very interesting. Doesn't show the same kind of divergence that we saw here. Looks more flat in my opinion, but the 50-day average showing a potential for some strength in tomorrow's session. We'll see how that one plays out tomorrow. Moving over to yields, you can see basically no movement here today. 10-year yield pulled back, almost tested my level. Again, we said this was overbought. Momentum's pulling back. I don't think it's going to pull back too much further than this. 2-year yield, I could actually see that pulling back a little bit further, maybe coming all the way down to 4.5. That would be interesting. Bearish momentum, bearish RSI on that one. Whereas the 10-year moving towards bearish, but not there yet. And RSI still above the 50 line. Moving over to the dollar on the 4-hour and the daily. You can see here on the 4-hour, we were watching this 21 EMA. We ended up breaking that here on the 2 o'clock candle on the 4-hour chart. Got above it, very close to these previous levels. You could argue we're just retesting that 144 EMA here on the daily chart. Certainly an area where you could find resistance, but momentum did tick up slightly. RSI still moving up a little bit. You have to respect that retest. Certainly could push through on the second test, or this might end up being a double top or a slightly lower high, and then we see a bigger pullback, giving equities a little bit more room to the upside. Definitely interesting here. The dollar driving equities a little bit more than it has recently. Moving over to JNK and TLT. JNK jumping up a little bit, retesting that trend line. We'll see if it holds. Definitely in a consolidation, above some trend lines, below some other ones. Kind of hard to trade it at this point. Momentum ticking towards bullish. Very interesting. TLT jumped above 96.50. Interesting level. If it holds above that, maybe we look for a pullback into that 99.50 to 100 area. That would be interesting. But like I said on yields, I think longer term yields are going to stay a little bit higher for longer, just like the Fed has been talking about. And I don't really see TLT jumping that high or holding up that high for much longer. Moving over to the volatility indices, MOVE index pulling back a little bit more. VIX still holding in this zone after throwing a wick to the 144 EMA. Still holding here, did not get up to 1850. Did look pretty weak on the day, but then we rallied throughout the second half of the session. So still consolidating, not giving us a ton of information, but elevated risk for sure. And I would guess that's going to stay elevated until we get through CPI. Moving over to my accounts, you can see I was down about $500, which isn't terrible given that I was long 200 shares and the Qs were down about $300. I also had those puts on the IWM, which I ended up taking off at the end of the day. The IWM rallied up to 193, 193.20 right in that zone. And I do think the IWM might find some resistance in there and that I can find a little bit better price tomorrow. We'll see how that plays out. Might have been a bad decision, but we'll see. Either way, on the Qs, I still have 2 covered calls. I rolled down and out to 372. You can see I have a little bit of a loss there, but not really. Qs still sitting at 372 right in that zone. And I got a $1.27 credit on those. Again, I would not mind having those shares go out tomorrow. That would be fine with me. And then I did sell a 375 and 376. If the Qs break 373 up to 373.30. I'll look to purchase these shares and convert those into covered calls for tomorrow. We'll see how that one plays out. But again, I do think we're going to probably find a little bit of resistance, just like we did yesterday. Let me know down in the comment section what you thought of Eli Lilly or the record high credit card debt. Will the economy start to pull back, or will we continue to take on debt forever? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.